Hello, my name is Steve Bigelow with the Candlestick Forum. We saw a change in market direction again. The sell-off today in the Dow produced an indecisive trend analysis because not only did it close back below the previous day's open, but it came right back down into this trading range, which just on a trajectory basis can make it pretty obvious that it's not going anywhere. It's going sideways. But more compelling was the fact that the NASDAQ closed back below the T line, which is a strong indication that we're not going this way. At best, we're going sideways or down or going bearish, which isn't a problem because there's as many good, if not better, short positions setting up as there are long positions. So when we see a change of direction, we always advocate having your safety stops in place. As you can see in the builders sector, have been acting very well for the last few weeks. But when you're up in the overbought area and you're trading higher, there's one logical place that the Japanese rice traders illustrate for us that the bears shouldn't be trading. And that's back below the previous day's open. Because as you can see, when it opened positive and closed below that open, you now have a bearish engulfing signal in the overbought area with stochastics heading down. That's where you probably want to take your money off the table and go to someplace else. So the T line is probably the target. The T line also acts as a resistance level. When we see a bounce in a downtrend, we always say you don't want to be buying here yet. You still need to see the confirmation that you're closing above the T line. The fact that they couldn't in Netflix tells you the probabilities are that they're still heading lower. So this keeps investors from jumping in and then getting slammed. Very simple rule. If it's in an uptrend, it should close above the T line. So this also allows us to take advantage, knowing what should happen based upon a candlestick signal for day trade setups, which is right now more viable because this market is pretty indecisive. But Tesla, oops, I didn't even put Tesla on here. Tesla had a bearish doji sandwich, came back up, and then sold off with another bearish doji sandwich potential. A doji sandwich potential obviously is a big down day, a doji day, and using the simple doji rule said if it's going to move in the direction how they open it. When they opened it lower today, two observations, obviously. One, you had the potential of this type of move on a bearish doji sandwich, and two, it told you that they weren't supporting at the 50, there was still more downtrend. So anytime you can use that 2+2 analysis, when you see a close, there's your evening star signal, failure at the T line, followed by a bearish doji sandwich closing right on the 50. We know the results of a doji sandwich. It's going to continue the trend. This makes for a very easy day trade setup or even a swing trade setup that if it opens lower tomorrow, obviously that the doji sandwich is continuing to work, and it's telling everybody else the 50-day moving average is not going to act as support. The probabilities are you got a good downside move. So anytime we can apply candlestick analysis with the specific signals, if we see this and then we see they're gapping it up above the previous day's open in an uptrend, giving you a trend kicker signal, and more importantly, where you can see it's happening right at a level everybody else is watching, that allows you with a high probability trade setup, whether you're a day trader or a swing trader, to know that you're in the right direction at the right time. So I'm pointing out these day trade setups because we're going to be doing a full day training this coming Saturday, starting at 10. It's supposed to go to 2. Don't expect to get out before 4 or 5 o'clock in the afternoon. There's a lot of valuable information that you can use for day trade setups, just using the logic of candlestick signals and patterns. And right now, day trades might be your best trading strategy when you don't have a very decisive market. Or if it's not heading down, you might be looking at a wedge formation, meaning it's going to chop around. That'll be it. We'll see you in the chat rooms.